Now, Taiwan Semiconductor reported a 39.1% increase in third quarter profit versus a year ago, beating estimates and hitting a fresh record high as demand for artificial intelligence chips stayed strong. The earnings beat sent shares of Nvidia and Broadcom and sent them higher on the belief that the AI boom will continue. Let's hear now from Ivana Delevska, the founder and chief investment officer at SPEAR Invest. Ivana, thank you very much for joining us today.
Thanks for having me, Roger.
What drove TSMC's performance this quarter?
Well, Roger, as you probably know, data center investments have been one of the largest themes going into the next 5 years, and these are data centers built for AI. And this represents pretty high percentage of TSMC's business. The company said that they expect that part of the business to keep growing at 40% CAGR, and they even implied that that could be even higher. So this is why you're seeing the more pure play companies like Nvidia and Broadcom be up on the news more than TSMC stock is reacting.
Now, can you see people holding or maybe taking a little bit of profit from it?
Well, Roger, TSMC has outperformed a lot of the competitors, so they've outperformed Nvidia year to date. So I think from that perspective, there are better opportunities out there in terms of entry points at this point in time. So this is why you're seeing a little bit of profit taking post the results. I think if you look forward, the AI investment team is really just starting here. We think we're on the cusp of a new wave, and I think people are not appreciating this new wave and what it's going to mean for this company. So I think long term, TSMC looks attractive. We're finding even better opportunities across the value chain. We disclose all of our holdings on our website, but companies like Nvidia are really going to be positioned well to benefit the networking side. Companies like Arista Networks are very well positioned to benefit. So we're really seeing broad impact to this physical build out of this hardware layer for AI.
And is TSMC strong earnings a good indicator what we can expect from Nvidia and the Magnificent Seven and other tech stocks?
Absolutely, Roger. I think the most interesting thing that the company said on the call was that they actually have seen momentum getting stronger over the past 3 to 4 months. And I think this is really important in proving our point that we're very early in the next investment wave. So I think we're going to see much more upside as we look forward, as you need to build out the physical infrastructure required for the next wave of AI.
And what potential stumbles are you looking for? What could we possibly see that could slow this down a little bit?
Well, Roger, interestingly, if you look at valuations, they look very attractive today, especially with some of these more mature companies that generate decent cash flow. So I would say it's very important for investors to focus on good risk rewards rather than chase high flyers. I think that's really where we're seeing a little bit more risk here as we get into year end, because with interest rates going lower, you're seeing some of this really riskier layer of AI skyrocket. And that's where we see a little bit more of the risk into the next few years. But if you're looking at the quality companies like Nvidia, like Arista Networks, there is really limited downside based on where the stocks are trading today on valuation basis.
Now, what kind of an impact might tariffs have? As TSMC executives mentioned that they're keeping an eye on that. Is it a concern?
Well, tariffs are a concern. Geopolitics are even a bigger concern. So we're closely watching those sides of the equation. I think the bottom line is that one way or another, we are going to need to build out this infrastructure. So I think a lot of times when tariffs get announced, they actually end up being good entry points because the stocks get hit, but they are ultimately able to pass through the cost of the tariffs to the consumer, given how strong demand has been.
And do you see TSMC growing in the U.S.? I mean, they've been investing heavily, but can they get bigger than that too?
Absolutely. So I think the most interesting thing about TSMC is that they've been investing in the U.S. and for a while, people thought that the foundry in the U.S. can never reach profitability levels similar to what they have in Asia. And now what we're seeing is that they are able to deliver very strong profitability. So the U.S. presence is ending up being much less of a drag than what people thought initially.
Could you see other companies following suit and being drawn back
Absolutely.
to the U.S.?
I think reshoring is one of our big investment themes for our fund. I think we're going to see a lot of investment in the US, whether you're seeing it on the energy side, on the power generation side, specifically for AI, or in some of these capacity additions for chip manufacturing. I think it's a pretty broad theme that is going to benefit a lot of these companies.
Okay, and what might be a factor maybe in slowing, again, that question, what might be a factor in slowing that down? The tariff war with China, could that be an issue, or could there be something hiding in the bushes?
Well, I mean, ultimately, the only thing that can slow it down if in 5 years we're not starting to see returns on these investments, right? So that's really the big picture here. I think from tariff and geopolitics, that can only accelerate it, right? But if you're in year 5 and we have these AI agents and they're not really delivering the productivity improvements that we expected to see, that could really kind of set a pause between this first or second wave that we see coming here and the next wave after that.
Okay, Ivana, thank you very much for joining us.